Hello everybody, this is Toni Turner and welcome to the market now as of about noon Eastern on Friday, November 17th. Before we start, please know that all of us at ToniTurner.com wish all of you a delicious and enjoyable Thanksgiving. And now on to the market. Wall Street's main indexes are drifting lower so far today, weighed down by losses in financial and technology stocks. The market may be fairly quiet in the coming week as institutional traders and investors head out for the Thanksgiving holiday. So now let's look at three charts that could give us some insight into the week to come. First of all, as we usually do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our S&P 500 benchmark index. When I captured this chart today, as you can see, the SPY was trading just above the red line on this screen, the 20-day simple moving average. It's popped back up above it in the last couple of days after a little slip on Wednesday. As I captured it today, it's trading at $258.17, or about $25.81 on the S&P 500 itself. We had an all-time closing high recently on November 8th at $259.11. As we can see now, it has popped up above its 20-day moving average, although it's not looking real strong today. But again, we'll probably have low volume from now on and into the coming week. The 50-day moving average is coming in right now at $254.35, and we have a trend line coming in here, a pretty decent trend line. We can call it a key trend line because we touched it here in 1, 2, 3, 4 places, 5 places actually, so it's key, and it's coming in right about just under, like about $254. So all of this in here is potential support for the S&P 500 or the SPDR should it drop down below the 20-day moving average. We can see now too that the 200-day moving average is trading at $243.90 today. Of course, that moves around with price as well. Our RSI that we've talked about in the last couple of weeks, we've talked about the relative strength index actually making a small bearish divergence here from the S&P. The S&P was moving higher, and as it was doing so, the RSI was moving lower. It's a slight bearish divergence here, saying that the RSI is not that impressed with the S&P's movements, and it thinks it ought to go a little lower. And sometimes, many times actually, whatever asset you're tracking, if there's a bearish divergence on the RSI, that divergence will win out and price will weaken, at least in the short term. The MACD here is also moving lower. It's been moving down slightly, kind of following the RSI for the last month, and now in the last few days that the S&P's gotten a little bit weaker, the RSI has moved lower with the red signal line falling below the black MACD line. We talked about this volume in here. We talked about how it's possible that some of that volume, and maybe more than some, is selling volume, and of course that will come out in price possibly within the next week. So we'll have to see if the SPY can get the momentum in the coming week, and it's going to be tough the week before Thanksgiving. The market likes to go up before major holidays, but when we get into the these end of the year holidays, a lot of time volume is very low because, of course, a lot of institutional traders and investors and retail people like us take time off for the holiday. So we'll just see what happens next week. May not be very exciting. And sometimes that's a good thing. So anyway, the SPY is still in an uptrend. Can't argue with that. The 50-day moving average is rising. So is the 200-day. Those are both positive things. We'll just have to see how it plays out next week. All right, our next chart today. I've told you this before in Tony's Market Club. We watch the IWM. This is the iShares Russell 2000 Small Cap ETF, or it follows that index symbol IWM. Companies valued at right around $300 million to $200 billion are called small caps. Now we can see that this is a different pattern than the SPY. We had an all-time closing high on October 3rd at $150 and 53 cents. Since then, it's pretty well drifted south, except for this big engulfing candle here that popped up and fell back down. Since October, the IWM has rolled over to a degree and moved back down to now beneath its 50-day moving average and popped up above it in the last 2 days again. Right now, when I captured this chart, the IWM was trading at $147.72. As you can see, it has the 20-day moving average coming down on top of it right now at an angle. This can cause resistance. And it's caught between that and the rising 50-day moving average, which is coming in at $147.26. So it's kind of caught here between support for the 50-day, resistance for the 20-day, and very low volume today, which is just barely holding it up. So it's white knuckling this line here. Now we can see a pretty strong trend line coming in here at about 145. So again, we have plenty of potential support here, and we can see that the IWM made a pivot low here this past Wednesday, just above 144. Plus 144 is support here from this prior high in July. So we've got a lot going on here with the IWM. Again, it can act as a leading indicator. The IWM, or the Russell 2000 index that it follows, has been known to lead bull markets into bear markets and bear markets into bull markets. So we kind of keep an eye on this thing. The stocks in it are U.S. centric. They're sensitive to interest rates. And again, it can act as a leading indicator. So while we don't trade on it, although you can trade this particular ETF, we don't trade on it, I certainly keep the results of the IWM at my elbow and see if it's getting quite a bit weaker, then I cut back on positions. As far as getting into new positions, I'll cut it back by a half to a third, because this index, again, should it fall lower, should it fall back below its 50-day moving average in the coming week, head back down toward 144 and even break 144, then I'm going to get even more conservative and certainly firm up my stops. We can see the RSI here is down. It came almost into oversold, but not quite into oversold territory this week. The MACD line is down right at the 0 line, so it is neutral right now. So I would think it would be very wise for all of us to keep an eye on the IWM in the coming week. Okay, our third chart today is one I've been keeping an eye on. It was too early to talk to you about it last week. This is the Sector Spider Consumer Staples ETF, symbol XLP. Now, on this daily chart, we can see that the XLP was trading at May highs back here at $57.36, then took a dive and has fallen down here into the early part of November, recently bounced back up, and today when I captured this chart is trading at $54.76. Now, if you'll notice, if you were watching this index at the time, these stocks got Amazoned. They really did. Amazon is now a verb. And the XLP got Amazoned. A lot of them fell, and it honestly didn't make a tremendous amount of sense to me, but then the market doesn't have to make a lot of sense. It does what it wants to do when it wants to do it. So these stocks fell lower And the main components in this ETF are now coming back, a lot of them. Top components in the XLP are Procter & Gamble, Coca-Cola, PepsiCo, Philip Morris, Altria, which of course is Philip Morris USA, Walmart, and Costco. So a lot of these are reviving now, and we can see that in the action of the XLP. It's moved up pretty dramatically. It came down, as I said, about 10% from its highs. It's moved up pretty dramatically in the last couple of weeks, and it's popped above that 50-day moving average. Now, it closed, again, it was trading today when I captured this chart at $54.76. It's running into, this little candle is today's candle, it's running into the 200-day moving average, which can offer resistance and is doing so far today. That's coming in at almost $55 here. So in the coming week, I'm going to keep an eye on the XLP. If it falls back down on low volume toward the 50-day moving average, which is coming in at about $54, that's fine with me. If it pulls back, that's fine. I'd love to see it, from my lips to the XLP's ears, I'd love to see it bounce off this 50-day moving average. That would be key, and that's where I'd like to buy it. Although if it remains above this line in the coming week, I still will probably nibble on it. Although, again, anything I'm getting into long now is fairly small position. So I'll keep an eye on the XLP. If it stays above the 50-day moving average, I'll probably be nibbling on it next week. My stop right now is, as always, if the XLP closes below the 50-day moving average, then I will be out of the position and maybe looking for another time to get in. So the XLP, you may want to keep an eye on it. People are getting more defensive here. Traders are getting more defensive. And if we see a pullback in tech stocks, the XLP may be somewhere you want to look at. Okay, and now on to next week's economic reports. But first, please join us this coming Monday, November 20th, for our next session of Toni's Market Club. And boy, we've had some winners lately. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. We are going into our 9th year. And I'm very proud to say that we actually have some members in Toni's Market Club that have been with us the whole time. They must be making money, or I'm sure they wouldn't be sticking around. This is a low-priced, high-value opportunity for you to learn more about the market, become a smarter trader, and make more money. So please join us. For those who cannot attend our live session, not a problem. The recording of our session is available a few minutes after the session ends to all of our members. For more information and to join, go to tonismarketclub.com. And now for next week's economic reports. There's always a week in the month where we don't have many reports, and next week is it. On Wednesday, we have durable orders, Michigan sentiment, and our usual crude inventories. On Thursday, we have our usual jobless claims and our usual nat gas inventories. And on Friday, we have building permits and housing starts. Again, join us for Toni's Market Club this coming Monday. Don't miss out on this fantastic opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.